Stop looking at those glowing red screens with eyes full of fear. The massive negative numbers you see aren't a disaster. They are actually the greatest red envelope giveaway in history. But this gift is only for those who can see through the mist of the screaming crowd out there. While millions are trembling as they watch their accounts evaporate second by second, a small group of ordinary people is quietly preparing to become millionaires. The last time this happened, those who seized the opportunity completely changed the trajectory of their lives forever. Welcome to Tony Invests Wealth, where we don't talk about fear, we talk about logic and raw data. Today, I'm going to help you stand on the right side of this massive wealth transfer with total rationality. The biggest mistake that 99% of people are making right now is the ironclad belief that safety is everything. When the market begins to shake, your primal instinct urges you to flee, sell off, and retreat to cash just to feel at peace. You've been taught to protect what you have, but in finance, that fake sense of security is the fastest path to poverty. The crowd believes that when everything is in the red, the world is ending. They choose to stay on the sidelines and wait for a better time. But the truth is, by the time the market looks good, the price is no longer cheap. You are buying temporary peace of mind at the cost of your entire potential profit. To understand why the crowd is always wrong, look at the classic doctrine of George Soros. Soros argues that markets do not objectively reflect reality. Instead, human prejudices change that reality. When people panic and sell, they create an irrational downward spiral, driving prices below value. And that is exactly where millionaires are born, right in the heart of the chaos. Let's do a reframe right now with a very simple shopping metaphor. Imagine you are at the mall on Black Friday and see a designer bag at 70% off. What do? You scramble, you run in, you buy as much as possible. But when the stock market is 50% off, the human brain works in the opposite way. Instead of running in to buy, people scream, "The house is on fire," and run out. You are fleeing from the biggest sale of your life by confusing volatility with true risk. Actual data from the United States shows every single crash has been followed by stronger recovery. If you had invested in the S&P 500 at the worst moment of 2008, your assets would have grown by 600% today. Those who became millionaires in 2009 aren't smarter. They just have better emotional control. They understand you must pay for present uncertainty in exchange for extraordinary future returns. If you wait until everything is clear, the opportunity to get rich has long passed. The mechanism here is the transfer from weak hands to strong hands in the system. Weak hands are emotional investors, driven by sensationalist headlines on social media. Strong hands are those who invest with a plan, raw data, and ironclad patience. When panic peaks, weak hands hand over their precious assets to strong hands at prices that are practically free. The financial system is designed to punish impatience and handsomely reward those who maintain discipline. You cannot get rich by doing what the crowd does because the crowd is designed to stay middle class. To enter the smart money circle, you must learn to see value where others see only collapse and ruin. In the next 5 minutes, I will introduce a visual mental model so you know exactly where you stand in this cycle. We will dissect the math behind expected value and why the real risk lies in doing nothing at all. You are standing before a door that only opens once every few decades, and I am going to give you the key to walk through it. To start, I want you to ignore the feeling of fear and replace it with a professional calculation. We call it expected value. Don't let this academic name fool you. It is essentially just a simple set of scales. On one side of the scale is the probability of being right and the amount of money you gain. On the other side is the probability of being wrong and the amount of money you lose. During market crashes, this scale is irrationally bent in your favor. Look at the actual data from the last time this happened in March 2020. When the world shut down due to the pandemic, the US stock market evaporated 30% of its value in just 1 month. The crowd back then screamed that this was the end of the global economy. But rational investors looked at the charts and saw a once-in-a-lifetime opportunity. They understood that the greatest risk wasn't losing another 10%. The real risk was missing the 100% recovery that followed immediately after. And what was the result? Within 12 months, the S&P 500 index not only recovered, but also hit new all-time highs. Ordinary people, those brave enough to buy at darkest hour, saw their assets double or triple. They became millionaires by betting on the inevitable recovery of the system. To help you visualize this more clearly, I want to introduce a mental model I call the wealth pendulum. Most people jump onto the pendulum when it is at the peak of euphoria. That is when everyone is talking about stocks and crypto everywhere. But that is also when the pendulum has no kinetic energy left and it begins to fall. When the pendulum swings toward fear, that is when it accumulates potential energy for the next boom. The smart money position is exactly when the pendulum is at the peak of pain. Why does your brain resist this logic so strongly? The answer lies deep in your amygdala. It cannot distinguish the difference between being hunted by a tiger and a declining stock account. It only wants you to flee to preserve your life immediately. The modern financial system is fully exploiting this biological weakness of yours to enrich large institutions. They need your panic so they can buy assets at the discounted price you are throwing away. High-quality assets are often sold off not because they are bad, but due to over-leverage. They are forced to liquidate assets to pay back bank loans. This is forced selling. Think of this like a broken vending machine spitting out gold bars at the price of candy. The average person fears it will explode, but the smart investor puts gold in their pocket. If you missed just the 10 best days, your returns would be cut in half. And those best days always appear right after the worst declines. This game is not for those who predict the future, but those who prepare for probabilities. And the highest probability in history is the market always goes up in the long run. You are standing before an opportunity to buy back your own time. Every dollar you invest right now has several times more power than when market is euphoric. You are shortening the road to freedom from 20 years down to 5 years. But I am not saying you should blindly buy anything that is dropping in price. There is a huge difference between catching a falling knife and buying value assets. In the next part, I will introduce you to a step-by-step action framework to execute this. We will talk about capital management so you are never knocked out of the game. I will reveal how the elite are restructuring portfolios. The real millionaire roadmap begins right now. To become a millionaire during this period, you need a sharp filter instead of just blind courage. Legendary investor Howard Marks calls this weapon second-level thinking. It is a concept that completely separates the amateur from the professional. First-level thinking is extremely shallow. The market is crashing, everything is terrible, I should sell everything to stay in cash. Second-level thinking is much more complex. Everyone is panicking, which means assets are cheaper than they should be. Real profits don't come from buying good things. They come from buying things that are much better than the crowd's expectations. When everyone's expectations hit rock bottom, any news that is less bad is enough to trigger an explosive surge. This is the exact moment we perform the asymmetric upside calculation. You bet small for massive potential. Look at the data from Warren Buffett's Berkshire Hathaway. He never tries to blindly catch the bottom. He holds record levels of cash, not because of fear, but because he is waiting for a margin of safety. The margin of safety is the armor that protects you if you predict the recovery timing incorrectly. If you buy an asset worth $1 for only 40 cents, Even if price drops, you win. To do this systematically, use the model from Nassim Taleb, the barbell strategy. Imagine a barbell with two extreme ends and absolutely nothing in the middle to minimize all average risks. One end of the barbell accounts for 90% of your capital. You place it in safe havens. The remaining 10% you pour into high-risk assets that have the potential to multiply 20 times. This model helps you become anti-fragile in the face of financial shocks. Assets are protected. At the same time, you still have the chance to change your life without wagering all your money. The crowd usually does the opposite. They pour all their money into average risk vehicles and lose everything. Now, let's move to practical action with the millionaire filter. This three-step process finds gold in trash. Step 1 is the survival test. Don't buy companies burdened with debt just because prices dropped. Look for financial fortresses that have enough cash to survive crisis without needing to borrow. Step 2 is the moat check. Does the asset you are buying have an irreplaceable brand or ecosystem? A cheap asset without a protecting moat is just a value trap waiting to crush your capital. Step 3 is the layered entry strategy. Never dump all your money into a single purchase. Divide your capital into 5 parts and disperse them whenever the market hits an extreme sentiment index. Your mindset at this point must shift from an employee to a tycoon who is acquiring strategic resources. You are no longer working for money. You are commanding a currency army to seize key positions. The smart money position appears when you feel a strange calm while everyone else is screaming. You realize that while the whole world is focused on tomorrow, you are focused on the true value. Real power lies in the number of options you have when the crowd has lost them all. When you own the best assets at the cheapest prices, you are no longer a victim. You are the master. You have the filter. You have the barbell model. And you have the entry strategy. It is the trap of excessively high expectations and the fear of missing out when prices turn green again. Making money during a crisis is only half the journey. Keeping it is the real challenge. When you start seeing your assets skyrocket, an extremely dangerous chemical floods your brain. That is arrogance. You start believing you are a true genius. You think you can predict every move. This is exactly when the Icarus effect appears. You fly too close to the sun. Many people became millionaires in 2021 thanks to crypto. But by 2022, they lost everything. They shifted from a rational investor to a bloodthirsty gambler without even knowing it. True wealth doesn't lie in flashing numbers. It lies in autonomy over your time. Don't let profits turn you into a slave. Remember the seesaw between ego and freedom. If you upgrade lifestyle immediately, you are building your own new cage, even if gold-plated. True power positioning happens when you don't need to prove anything to anyone out there. You belong to smart money because you know where to stop. Money is only a tool. That's family, health, and peace of mind. That is when you truly own the entire building. The difference between the rich and poor lies in the game they choose. In that game, you fight for a title that a company can strip away at any time. You will join the asset game. This is the game of accumulation and permanent freedom. The goal isn't to be a boss. The goal is to master your own mind. You will find yourself no longer envious of new cars. Instead, you'll look with deep understanding, because you know they just sold their freedom cheap for an illusion. In the new economy, scarcity is the source of power. Exceptional experts are rare. When you are an expert, you set rules. You can confidently decline toxic projects. Power comes from being able to say no to your boss while they still need you. Look back at the entire logical path we have taken. Don't let flashy numbers deceive you. Always check the ROI framework before making any big decisions. If you don't change, price is high. 10 years from now, You might find yourself at age 50 with a fancy title, but no skills. You will live in fear of being fired because your salary cost is too high. Don't fall into that. True wealth is the ability to wake up and say, I can do whatever I want today. That is freedom. Take action right now. Take a piece of paper and calculate your real hourly wage as honestly as possible. Then, leave that number in the comments below, or share a time you bravely rejected an offer. I will read every comment and analyze it with you from an investor's perspective. If you find these analyses valuable, hit like and subscribe to join Tony Invests Wealth. We don't teach you how to climb the ladder. We teach you how to own the entire building. Protect your time and play the game of the free. I am Tony. Thank you for your precious time. See you in the next in-depth analyses. Always keep a cool head and a heart hungry for freedom.